Ladies and gentlemen, good day and welcome to the DB Corp Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. We have with us today the senior management team of DB Corp Limited, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. P.G. Mishra, Group CFO, Mr. Mushtaq Ali, Vice President, Mr. Lalit Jain, AVP, and Mr. Prasoon Kumar Pandey, Head Investor and Media Relations, who will represent DB Corp Limited on the call. The management will be sharing the key operating and financial highlights for the quarter ended June 30th, 2022, followed by a question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have already been emailed to you and are available on the website of the stock exchanges and the company's investors section. Trust you have been able to go through the same. I now hand the conference over to Mr. Pawan Agarwal. Thank you, and over to you, sir.
Thank you very much, and a very good evening to everyone, and thank you for joining the Q1 FY23 DB Corp earnings conference call. We will begin the call by highlighting the key financial performance for the quarter ended June 30th, 2022, followed by key operational updates. We are pleased to report that despite inflationary pressures and challenging sentiment in the domestic and global markets, we have delivered strong results in this quarter. We witnessed good growth in both circulation and advertising. We have commenced this new financial year on an optimistic note. In Q1 FY 2023, advertising revenue grew by 96.6% to rupees 3,369 million versus rupees 1,713 million of Q1 FY 2022. Circulation revenue recorded a growth of 4.5% to rupees 1,156 million against rupees 1,106 million of previous year. EBITDA stand at rupees 738 million versus rupees 51 million of previous year, despite high newsprint prices and a continued investment in the digital business. This was possible in large measure due to stringent and long-term cost control measures that continue to serve us well. Print business EBITDA margin stood at 20%. PAT for the quarter stood at rupees 310 million versus a net loss of rupees 223 million in Q1 FY 2022. Moving on to our digital business, the company has been steadily growing its loyal daily active user base across all its apps. An increase of over 8 times from 2 million in January 2020 to about 17 million in May 2022 can be attributed to focus on ensuring high quality content with a bespoke and highly personalized product experience. This, we believe, has helped propel Dainik Bhaskar Group to becoming the dominant digital leader with #1 Hindi and Gujarati news app players. With the dominance already established in the print format and now in the digital format, we are undoubtedly the #1 digital Indian language newspaper in the country. Coming to the radio division, in Q1 FY 2023, revenue grew by 105.8% YOY to rupees 320 million versus rupees 156 million last year. EBITDA grew exponentially to rupees 94.2 million versus loss of 2.6 million. EBITDA margin for the quarter stood at 29.4%. The MyFM team continues to connect with audience and augment listener engagement activities through innovative content creation. This has also helped us get better ad rates, and we are hopeful of further improving this in the forthcoming quarters. With this, I would now request Mr. Girish Agarwal to update us on the operations. Over to you.
Good evening and thank you everybody. Thank you, Pawan. We hope and wish you and your family members are healthy and safe. As Pawan stated, we have commenced this financial year on a stronger note with strong Q-on-Q and YOY performance across all segments. I think it's more important to note the Q-on-Q rather than YOY for simple reason because last year the first quarter was a COVID hit quarter. So the numbers look very highly growth-centric, but to be very honest, we need to compare it Q on Q. Also, we should compare ourselves with the 19-20 quarter rather than last year. We are hopeful that at this pace, print sector should be reaching to satisfactory level with growth over FY20. In the interim, we continue to strengthen our position in circulation by energizing our distribution channels to onboard new readers as well as focus on institutional sales as an added stream of revenues and growth. We are hopeful that this strategy will allow us to tap the organic readers universe that we already have in our market. Our leadership position in the market has helped us attract a wide variety of advisors, both from the traditional categories like real estate, jewelry, education, as well as new age sectors like e-commerce, startup, fintech, etc. We will continue to strengthen our advertising funnel by innovations such as award-winning special editions, while providing a platform to advertisers for hyper-local ad campaigns. On our financial performance and cost optimization, as we have been pointing out over the past few quarters, our singular focus has been to ensure that our various cost cut measures are long-lasting. As indicated in our press release, while we are working towards increasing our revenue base, we have also managed to save approximately 6% in the operating cost vis-a-vis Q1 of FY 2020. Resultantly, the print business EBITDA margin for Q1 FY 2023 stood strong at 20%. EBITDA margin expanded by more than 700 basis points despite newsprint prices headwinds. We believe that the newsprint prices are peaking and we should get some relief going forward from the Q3 of this year. This is all from our side, and my colleagues and I would be now happy to respond to your questions. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question at this time may please press star and then 1 on their touchtone telephone. If your questions are answered, you may withdraw your question from the question queue by entering star then 2. Participants are requested to please use handsets while asking a question. We will wait for a moment while the question queue assembles. Our first question is from the line of Bhagesh Kagalkar from HDFC Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the level of disclosures in your result bulletin.
Thank you, sir.
Just two questions, which are actually in mind of many investors. One is our paywall strategy over a bit of 2-3 years, how it will shape up, and secondly, the issue that concerns all the media houses, issues with Google and other Western technology companies also, that we are not getting fair share of revenues when we invested so heavily in a countrywide cost base, basically. Yeah.
So the first is about the payout.
No, the paywall. How we are going to?
I thought payout. Okay.
My mistake. The paywall strategy. The New York Times person we have taken on constantly.
As you know, in digital, we have already reached to a level of 17 million monthly active users on our app. And these numbers are pretty steady from last 3-4 months, as you must have noticed. Despite, if you look at my other competitors, if I look at any other news channel or app and all that, they all have gone down in numbers. So that clearly indicates that we have found the stickiness with our readers very clearly. Our time spent also is almost at 13 minutes. That's also pretty encouraging for the news app. All this happening, I think, as you mentioned about the paywall, that's the way forward for us. Now, whether it should happen in a couple of quarters or we need to wait a bit more, I guess we are still working on it.
Yeah, the second question was regarding the revenue strategy that we need to get from Google and other Western technology companies, because they are using our...
The Digital Newspaper Association and Indian Newspaper Association Society, they both have filed a complaint or a petition with Competition Commission of India, requesting them to have a look at this aspect so that some giants, those who are misusing their monopoly, they should not do it, and they should share the fair amount of revenue with all the publishers. So the matter is sub judice, and we are very hopeful to get a positive outcome from them soon.
Okay, then you can answer the question on payout also. Actually.
Sorry, sir? Payout.
Related. What are your view?
Just to inform you, our board today recommended 3 rupees dividend, which is going to be recommended to the AGM now for this payment.
Yeah.
This is an interim dividend which will be done, and then I think there will be further more going ahead.
Okay. Yeah. Thanks, sir. Thanks for the replies. Thanks and all the best from my side. Yeah.
Thank you very much. Our next question is from the line of Nikhil Chandak from JM Financial Family Office. Please go ahead.
Yeah, hi. Actually, my questions were, in continuation to what Bhagyesh just asked. So, any numbers which you could share both on the, paying for the app, so to say, and paying for the news, and also on the Google, assuming the order goes in favor of the INS and like it has been in some of the other countries, what can be the likely or approximate revenue accretion which can really happen, from that?
In fact, in our petition, that's one of the points we have mentioned to CCI, that please ask Google to disclose the exact advertising income they make it from India. And then based on that, some ratio to be decided on. So I think we should wait for the Honorable CCI to decide on that. Number one. First you asked about the money which we can get from the app and all that, correct? The paywall.
That's right.
Yeah, I think we are also evaluating it, understanding it from the market. Should take a couple of more quarters.
Understood. Or maybe some, any global model which you are trying to kind of, understand and try.
We are studying all the possible models which have been adopted by publishers in Europe and US.
Right.
To understand that. But at the same time, we'll have to see it from the Indian perspective and then take a call on that.
Okay. Great. Thank you.
Thank you. Our next question is from the line of Amit Khetan from Laburnum Capital. Please go ahead.
Good evening and thank you for the opportunity.
Good evening.
So can you provide some color on the advertising yields? Where are they relative to pre-COVID levels, and where do you eventually see them going? Like, would they recover to 100% of pre-COVID levels, or would they be slightly lower, and by when?
Now this advertising yield, again, we are looking at category-wise. So some categories yield are already higher than the pre-COVID level. But some categories are still struggling. Now it's a function of the category behavior in the market. So for example, real estate category, we are higher than the pre-COVID level because that category is already bounced back in a big way. But in our auto sector, that's still struggling because the automobile category as such is down. So yeah, that's the way we are looking at it.
But on average, where would you be relative to pre-COVID?
Still below the expected number.
Okay, and you expect recovery by Q3, which is the festive season?
I can say yes, we are trying for it, but will the recovery happen faster? Because see, there are two challenges we are facing. One is the yield improvement and also ticket size improvement. So, at the negotiation table, you may decide either of it. So we are taking a call accordingly.
Understood. And secondly, in terms of number of copies, where are we again relative to pre-COVID?
We are now at 42 lakh copies in this quarter. Summer quarters generally slightly lower than the normal. So we hope that in this Q2 of this year, the copies should increase by a couple of lakhs. Compared to the pre-COVID, which is 19-20, this is certainly down by almost 10-15%.
Got it. Thank you very much.
Thank you. Ladies and gentlemen, before we take the next question, we'd like to remind participants that you may enter *1 to ask a question. Our next question is from the line of Ria from Equitas Investments. Please go ahead.
Hello.
Yes, madam. Good afternoon.
Hi. Good afternoon. Good set of numbers. Congratulations.
Thank you.
So basically, I just wanted to have a word about where are we seeing the advertisement majorly coming from? Like you said, like real estate doing well, and you expect auto to do good. So what part, could you give a percentage-wise breakup of which segment forms how much of the total advertisement revenue?
I have the whole chart in front of me, but because of the competitive environment, I don't want to read out the whole chart for you, but let me still give you the flavor. Education as a category contributes the most because of the Q1, because in Q1 that's the education season time. Followed by government and then real estate and FMCG. Real estate is doing very well. If I compare real estate with, as I'm telling you that I don't want to compare any number with last year because last year was the COVID hit month. So all the numbers show the growth of 100%, 200%, looks very fancy. We should compare ourselves with 1920, which was a normal year. If I compare from that year, the real estate is up by almost 30%. Jewelry is up, big time. Even health sector is up. Three sectors which are down, which are making an impact. One is education. Education is actually not down. Education is shifted. Because of the results, all the results this time came late. Generally, the NEET results, the class 10th and 12th results, they all come in the month of April and May. This time, these all results shifted to July and August. So that's the reason the advertising got shifted. Apart from that, government for us is down for certain reasons, which we have briefed you earlier also. And automobile is one category which is still big time down because of their short supply.
Okay. And are we seeing any resistance from the FMCG guys?
FMCG contributes around 5% to our overall kitty, and which is, if I compare 1920, it's flat right now.
Okay. And government, you were saying something that, it's been on a declining trend. So is it because the elections are got over and now there are no further elections, something like that?
Yes, part of it that way also.
Okay. So in the next quarter or the coming year, which segment of it do you think would make a major impact apart from real estate?
I think education will make a big impact. FMCG, automobile should do a lot well going forward.
Okay. And I want to ask the second question on the cost front. Since we are seeing paper cost, rising so much, could you give a flavor on it? Like what were the costs before and what has it been right now? And are we able to pass on the entire cost in the circulation? Like, are we breaking even just on a circulation basis, or what? How do we look at it?
First of all, thank you very much to give us the hope that we can break even on the circulation. Though we are not breaking even on circulation, because generally newspaper model is right now is not that they really break even on the circulation price. Anyway, just to give you the number, on the newsprint prices, if I compare with 21-22, we were at around 41,000 rupees per ton, which this year is at 62,000 rupees per ton. So a big 50%, 51% jump in the overall price of newsprint. While I see the Q4 of last year, then the price was roughly around 50,000. Because we had the old stock, so as the old stock getting consumed, the new stock coming at a higher price. But one silver lining, what we recently came to know, that Government of India is thinking to do something with the custom duty of 5% on the imported newsprint. So if that finds the favor with the government, that 5% duty will go away, and that will have an impact on imported as well as Indian newsprint also in terms of pricing. Right. Another point which is right now working little negative is the dollar price. Because the dollar price going up, my imported parity with the Indian newsprint as well as the foreign goes up. So that's another concern right now. So all in all, newsprint is one big elephant in the room, which we are still struggling with.
Right. So can we with the ad slots which we are giving, so have we increased our rates or how is it?
We have increased our cover price by 5% if I compare last year number. We are right now at 4.76 rupee average cover price of our newspaper. We have some room there, maybe 5-7% more room to increase the prices.
Okay. Got it. But if we increase the 5-7%, we can, just pass on the incremental pricing because of the paper cost. If I'm
yes.
Okay, I think that's it from my side. I'll get back in the queue for further questions.
Thank you, madam.
Thank you. Before we take the next question, participants may enter *1 to ask a question. Our next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi. Good afternoon, and congrats on good set of numbers. I had a question on this thing. See the circulation numbers, and we stated earlier itself that we should look at Q-on-Q numbers, okay? But they are flattish, okay? How quickly can we get the circulation? And at this price point of newsprint, maybe it is not profitable. But what is your view? And can the ad rates what we are getting, or the yield rates, will be dependent upon the circulation copies what we are giving, or is the number? And how do we think about growing those numbers?
Okay. So there are two different things. Let me answer them that way. One is that is the absolute circulation copies going forward will increase? Answer is yes. We are working on it. As for example, the average of the quarter, which we mentioned to you around 42, as in the month of July itself, we have got another 60,000 copy growth over that number. So we are hopeful that the copies will grow furthermore, number one. Number two, from the advertiser perspective, I think one good thing has happened that in spite of whatever little copies we have lost because of the COVID and the format of the offices and all that, I would say my market share in various markets have improved, which means if I have lost X number of copies, maybe the market and the competition has lost much more. So whether it's the market of Madhya Pradesh or Rajasthan or Punjab, Haryana, in most of these markets, my market share has improved. In few markets, I maintained my market share, like Bihar, I maintained my market share, in spite of me losing and competition also losing. So that's a good sign that if my market share improve and the copies are further growing, I think that's a very positive sign.
Okay. And are we seeing some players reducing their presence in certain markets, or just trying to leave some of the larger players also, unlisted larger players, just to understand?
So we have not seen anybody leaving the space, but yes, because of the newsprint price hike, we can clearly see a lot of people are compromising in their product. So if their pages were say 16, they brought it down to 14 or 12. They're using bad quality newsprint and all that. That certainly is helping us to gain the market share.
Okay. And on the advertisement rate in the newspapers?
Sorry, sir?
Advertisement rate, okay, or the yield, okay?
Yeah. So I think that's what we are pushing, that the yield should improve since our market. See, advertising rates are the, in a way, they are the resultant of your reach in market as well as leadership position in market. You know, so since our leadership position comparatively has gone up, so we are, that's the reason, asking for a better yield.
And on the radio, how is the utilization and the rates? Means in Q4, I think, or Q3, we have stated that the yields or rates we have increased. The improvement is on the yields, or do you think that both things are improved? The rates as well as the capacity utilization.
So right now we are infusing both. We are using volume. We've also, in the last 2 years, there's a category called non-airtime on radio. That used to be less than 20%, roughly 15%. We have pushed that category. Without burning inventory, we are running a lot of activations and on-air activities which don't consume our space. We have basically introduced both, and that non-airtime activity gets us better realization of space. But for the commercial that we were playing earlier, we are seeing some improvement in yield, but we have further room for improving the yield. But right now, our focus is on getting back our full volume, which we have, and we are able to maintain our value as a result of that.
Okay. Okay. Thank you so much, sir.
Yeah. Thank you.
Thank you. Ladies and gentlemen, a reminder to participants, you may enter *1 to ask a question. Anyone who wishes to ask a question at this time may enter *, then 1. Our next question is from the line of Gaurav Gandhi from Glorytail Capital Management. Please go ahead.
हेलो सर, कॉन्ग्रेचुलेशन ऑन द गुड सेट ऑफ नंबर्स। सर मुझे ये पूछना था कि गवर्नमेंट के साथ हमारा एग्जैक्टली क्या डिस्प्यूट है और कब तक ये रिजॉल्व होगा, क्या इशू आ रहा है?
हमारा कोई डिस्प्यूट गवर्नमेंट के साथ नहीं है। कुछ स्टेट गवर्नमेंट ने पिछले साल 1.5 साल से कुछ हमारे साथ एडवर्टाइजिंग करना बंद कर दिया है। हम उनसे लगातार संवाद कर रहे हैं, उनसे बातचीत कर रहे हैं, ये समझने के लिए और समझाने के लिए कि जो हमारे पाठक हैं उनको उन तक का मैसेज पहुंचना चाहिए, और वो कुछ हमारी बात सुन रहे हैं, लेकिन अभी तक उसमें कोई निर्णय हमको उनसे नहीं मिला है।
क्या वजह है, लेकिन क्यों उन्होंने बंद किया अपने साथ एडवर्टाइज करना?
ये हमारे को भी नहीं पता, क्योंकि सरकार का डिसीजन होता है, ये उनकी पॉलिसीज के हिसाब से होता है, तो हमारी जानकारी में नहीं है, हमारे को उन्होंने बताया भी नहीं अभी तक।
अच्छा, और अभी अपना जो डिजिटल एप्लीकेशन है बहुत ही ज़बरदस्त, बहुत ही बेहतरीन है, मैं भी यूज़ करता हूँ शॉर्ट वीडियो कंटेंट उसमें, और ओवरऑल जो अभी मैं तो महाराष्ट्र से हूँ तो दिव्य मराठी में जो पढ़ता हूँ अमेजिंग कंटेंट रहता है यहाँ पर। सकाळ, लोकमत, जो भी दूसरे न्यूज़पेपर है उनसे बहुत ही अच्छा कंटेंट अपने पास रहता है, तो सर्कुलेशन अपना बढ़ सकता है अगर दूसरे न्यूज़पेपर का कंटेंट और अपना न्यूज़पेपर का कंटेंट अगर कंपेयर करें तो अपन वो सर्कुलेशन बढ़ने के लिए क्या कर रहे हैं, क्या क्या स्ट्रेटेजी? जैसे मैंने बीच में एक बार पढ़ा था, आपने डिस्क्लोजर दिया था कि बॉम्बे या अदर सिटीज़ में कुछ साइकिल पर भी अपना मार्केटिंग वगैरह चल रहा था। वैसे लोकल टियर 2 टियर 3 सिटीज़, छोटे टाउन्स में भी बढ़ने के लिए सर्कुलेशन क्या स्ट्रेटेजी है कुछ इसके लिए?
तो हम सारे मार्केट्स में काम कर रहे हैं। जैसा आपने बताया कि कंटेंट अच्छा है, और मैंने बताया कि भी जुलाई में ही हमारी करीबन 60,000 कॉपियाँ बढ़ी हैं, तो मैं उम्मीद कर रहा हूँ जो मेहनत टीम कर रही है उसका रिजल्ट आगे महीने में और आएगा।
अच्छा, और ये दिव्य भास्कर में मैं देख रहा हूँ मंथली एक्टिव यूजर्स में कुछ 5 लाख कम हुए अपने 3.7 मिलियन से जनवरी 22 से मई 22 में 3.2 मिलियन है, तो ये 5 लाख कम होने के कारण मतलब कंसोलिडेशन है या कुछ दूसरा वजह है?
देखिए, डिजिटल में कुछ डेटा हर महीने थोड़ा बहुत ऊपर नीचे होता रहता है, लेकिन ओवरऑल हमारे पास अच्छी खासी ग्रोथ बनी हुई है।
और डिजिटल एप्लीकेशन मोनेटाइज करने का प्लान आगे कैसे?
तो मैं आप ही से सवाल पूछता हूँ, जैसे आपने बताया डिजिटल बहुत अच्छा है, आप यूज़ भी करते हैं, तो अगर मैं इसको अगले महीने से इसको पे करूँ तो आप पेमेंट करेंगे?
110% मैं करूंगा पेमेंट, लेकिन मैं भी अभी एनालाइज कर रहा था कि मान लो अपना 17 मिलियन यूजर्स है और आप अगर मोनेटाइज करते हो तो आपके हिसाब से तकरीबन कितने 10%, 20%, 30% सब्सक्राइब करेंगे? ऐसा कुछ आपने एनालिसिस किया है उस चीज़ का?
जैसे मैंने आपसे सवाल पूछा, आपने कहा 110% करेंगे, तो मैं बाकी उन 17 मिलियन से सवाल अब धीरे धीरे पूछना चाहूँगा, तो उससे मालूम पड़ेगा कितने लोग करेंगे और कितने पैसे देंगे।
यस सर, ऑल द बेस्ट, ऑल द बेस्ट।
थैंक यू सर।
Thank you very much. Our next question is from the line of Mohit Khanna from Banyan Capital Advisors. Please go ahead.
Yes, good afternoon, sir, and congratulations on very good set of numbers here. I just wanted to get more clarity on, newsprint. So are you importing from Canada or Russia, first of all? And then you did mention newsprint pricing. I think I could not get it. If you could repeat that. And then, first this and then probably I'll get back.
So newsprint prices, let me tell you, last year, Q1 was at around 41,000 rupees per ton, blended for Indian and imported. This year it has become around 62,000 rupees per ton. So around 51% price hike in terms of newsprint. Coming to your second point, are we importing? Yes, we are importing, and our imported percentage is also in the range of around 30-35% we are importing in the current quarter. Last year the import was higher because the rate was better for imported than Indian. Because of Ukraine war, our Russian import has almost come to a standstill, like on a halt. Because of that, we are not able to import much from Russia, but we are taking the quantity right now from wherever we are able to get it.
Fair enough. And when you say, when we talk about the ad yields and the ticket size, that is the negotiation trade-off that you mentioned, right? What is your sense among the advertisers largely on a small scale in small cities? What is the traction you are seeing? And is there sort of an inflection point wherein by this Diwali you see an inflection point wherein you will get a decent ticket size and yields might start to pick up from there on?
So what happens is that in newspaper business, the ticket size is more critical, to be very honest, because I'm not a radio or a TV business where my 24 hours are fixed. So for example, on a particular day, if I get double the revenue, double the volume or triple the volume, I can publish it. I can increase the number of pages. So that's the reason my large focus is also on the ticket size. Even if I have to, not take the yield hike. For example, if I'm looking at a 10% yield hike, and if somebody comes and offers me, okay, I'll offer you 5% yield hike, but I offer you a 20% ticket size increment, I will take that.
Fair enough. So now let me just rephrase the question here. In terms of different categories that you mentioned, education, government, real estate, in these categories, where have you seen the biggest ticket size or ticket size increments or increase, recently, and where is your expectation that in which segment it's going to go a lot higher?
Real estate is one category where we have seen a big ticket size increase.
Okay. And then education, jewelry, FMCG?
Education, not much, because very seasonal thing. Jewelry, yes, few clients, yes, but across the category, if I see, real estate is one.
So real estate is just one category that you would point out, which is definitely witnessing ticket size and yield increases on both, right?
Yes, sir.
That's a fair way to look at it? Okay.
Yes.
Okay. Fair enough. Thank you so much.
Thank you very much. Our next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Hi, sir. So can you please share the quantum of the ad spends in Q1, and for how long are we looking to continue these spends?
Ad spend in terms of digital marketing you're talking about?
Yes.
Okay. Digital marketing, not only the ad spend, the overall money which was spent in the Q1 and some in the last Q4 also, it was largely more in the Q4, not in this Q1.
Okay. So are we still continuing that, like increased spends for coming quarters?
No. Now since we have got a pretty good size and a good traction of the market, so we have reduced drastically the marketing spend on digital. I think the organic growth is very good, very encouraging.
Okay, so like we have almost like completed the investment phase of that, or the ad spending phase of that part, right?
I think you misunderstood me. We are still in the investment phase. Why? Because investment is not about the advertising alone. Investment is in the technology, is in the manpower, is in the infrastructure, everything. At the same time, some bit of marketing also. So our investment phase will continue because 17 million is not our ultimate benchmark. We need to go 5 times more.
Okay. Got it.
Thank you.
Thank you.
Thank you. Our next question is from the line of Falguni Datta of Jet Age Securities. Please go ahead.
Hello.
Yes, madam.
Yeah, good evening, sir. Sir, I have one question. How much was the cover price increase that we took in FY22 in all?
FY22, from 4 rupee 33 paisa we went up to 4 rupee 62 paisa. 30 paisa, almost 8% increase overall.
And some increase in Q1 as well, right? Because you said now it's 4.76.
It is now 4.76 if I compare Q1Q. It means 4.53 has become 4.76.
Okay.
That's the reason if you notice my overall circulation revenue has gone up to 4.5%, 5% almost.
Okay. And sir, another question on this is, suppose newsprint prices tomorrow are supposed to come, if they come off significantly, will we be able to retain this price increase?
Yes, very much. Because we have not passed on much to a reader, no?
Yeah. So at least we get a benefit of that. I mean, as you mentioned, we are not breaking even there. So at least doing that, if this come off and we are able to read in, at least we may be able to break even or maybe make some bit.
Absolutely.
And sir, another question, pardon me for my ignorance, like on this digital thing, whenever you start charging money from the app users is another thing. But do we also get revenue from the ads which people could be showing there? Because I've never used it, so I'm just asking you. Like, do we get some ad revenue from there already?
Allow me to make a request to you that start using my app. It's good and very knowledgeable. Number two, advertising point of view, right now we are not taking any ads on our app, but going forward, company has plans to start accepting ads over there.
Okay. And just as an input, like many papers which, this is just an input, many papers that we had earlier been taking physical copies from, for now in COVID times we've shifted to digital. And what I feel, I just checked a few papers, like this is all in the English print, but all of them, people are now willing to pay the digital mode.
Yes,
so
that's what we are hoping, that people readers in our market are also willing to pay and accept to pay.
Okay, sir, that's very good, sir. That's all from my side. Thank you.
Thank you, madam.
Thank you. Our next question is from the line of Anuj Sharma from M3 Investments. Please go ahead.
Yeah, thank you. One is appreciate your capital allocation policies and strategy.
Thank you, sir.
My question is on pagination. If we compare pre-COVID and currently, what is the difference in pagination and how do you see that going forward? I understand it's a function of volumes, but just between past and today.
So, for example, this quarter, we were at almost 19 pages average.
Okay.
Compared to last year, this quarter at 16 pages. That was a COVID hit time. But if I compare this with 1920, it was 23 pages average. So which means we still have to go up by 4 pages more to achieve the pre-COVID number, and that's where the advertising has to come in picture.
Okay. And that will be a function of the ad to edit ratio?
Yes,
sir. Go forward.
Yes.
All right. All right. Any outlook as to when do you think you can reach that, or internally?
We have been really working hard. Our teams are really working hard to see how we can further grow the advertising revenue. And some areas we are getting good results, but something here and there keeps happening. So let's hope when newspaper prices soften down, the advertising also comes back.
All right. All right. Thank you so much for that.
Thank you very much. Our next question is a follow-up from the line of Ria from Equitas Investments. Please go ahead.
Hello, sir. Thank you so much for giving me an opportunity again. So this question is mainly from a radio business perspective. So I just wanted to know, are we maintaining our market share there, and what is the incremental advertisement we are getting from there? Like, could you explain me the current scenario in the radio space?
So on the market share, happy to share with you that our market share, compared to the quarter 19-20, we are already sitting at a very high market share. Despite a lot of reduction in the price, we've been able to maintain our market share, not just maintain our market share in terms of volume, but we've actually upped our value share across all our stations. And healthy mix of advertising from all categories. And a healthy mix of advertising categories, value from all advertising categories.
Sorry, I couldn't hear you.
I was saying that, healthy mix of advertising categories, and we've been able to maintain our market share basis 19-20 Q1 is at the same levels, and we have upped our market value share of wallet has gone up in most of the markets as well, because our rates have been better than the market.
Okay. And for the radio business, what would be the major advertisement sources, like segmental wise?
Again, all same. Lifestyle would be one large category, followed by healthcare, FMCG, electronics, real estate, education, banking, finance, all the .com companies.
Okay. And over here, are we seeing some, resistance from the players for advertisement?
I didn't hear you properly.
So basically, are we seeing some curtail in the radio ad spend? Because as we are reading that, as a percentage of the entire their advertisement spends by the major FMCG, they are, more of doing social media advertisement right now and curtailing on likes of radio, TV businesses. So are we seeing any impact of that?
Not in our markets, but we are seeing some reduction in volumes in the bigger cities. But our stations are all in tier 2 and tier 3 cities, and we still see a lot of companies being interested in our markets. But we do see, when we look at the ADEX at the big cities, we do see a reduction though, but not in tier 2, tier 3.
Okay. And what would be
ma'am? Maybe request you to please return to the question queue. We have several other participants waiting.
Yeah, this is the last question.
Okay.
So what would be the yields here in the radio business, advertisement yields?
So that depends on the station to station.
Okay, on an average, if possible, if you could give me a ballpark number.
We will not be able to give you this competitive information now, please. I hope you will appreciate.
Thank you. Yeah.
Thank you. Our next question is from the line of Ankit Shah from White Equity. Please go ahead.
Thanks for taking my question. Sir, can you share the expected percentage increase in inventory cost in, let's say, Q2 and Q3?
Tough question. We are at 62,000 rupees per ton in Q1. I think Q2 will be at least maybe 3 to 3.5% more because of the new stock coming in picture.
Right. And Q3 should be further higher or should settle at 3?
3 can actually go down because we've been getting some softening indications from the mill in the southern India, as well as the import duty cut assumption by the government. If that happens, then I think Q3 should see a cut down.
Okay, great. And we have accumulated fair bit of cash on the balance sheet. Apart from the 2 dividends, is there likely to be any accelerated payout, maybe in the form of a special dividend or buyback?
So right now, in the balance sheet, as a cash, bank and mutual fund, we have 532 crores in the balance sheet. And we have, board has announced a dividend of 3 rupees right now. And I'm sure, as been our policy in last so many years, we don't sit much on the cash. So going forward, this money will be utilized in the best possible manner for the stakeholders.
All right. That's it from my side. Thank you.
Thank you, sir.
Thank you. Our next question is from the line of Harshit from Flair Capital. Please go ahead. Mr. Harshit, your line has been unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, we can hear you.
Yeah. Hello, a great set of numbers. Congratulations for that first.
Thank you, sir.
Yeah, my first question. How current digital revenue, sir, and going forward, how much do we target?
Our digital revenue currently, as I mentioned to you, we don't accept the advertising on the app, so it's 0 from the app, but we still have some revenue from the web because we accept the advertising on the web, so there is some revenue on the web, but that is not our focus area. And going forward, there will be a big revenue source coming from the advertising and subscription going forward.
Okay. And till date, how much investment have you made in this digital strategy?
If you remember, sir, 2 years back, I took the liberty of requesting all the investors to allow us not to disclose the digital numbers separately because of the competitive environment. And you all were kind enough to allow us not to do that. So that's the reason we are not disclosing the separate numbers for digital.
No problem. I apologize. I'm a new investor. Okay. And 75% of our print revenue comes from ad, and 25% comes from cover pricing.
Yes, sir.
Do we expect to be in the same ratio going forward?
Yeah, largely this would be ranges around 80-20 also. When the advertising goes up, it can go up to 80% and the circulation could be 20%.
Okay. But below 75, we are not targeting.
As of now, no, because advertising is also a big revenue. And when the circulation revenue goes up, advertising also goes up.
Okay. And with the shift happening to digital, do we face the problem of cannibalization from physical to digital? Is it happening within our customers?
I would say yes to some extent. For example, if we have lost around 10% copies, I'm sure there would be some 4-5% people, those who were reading my newspaper earlier, now are on the app. Like I was talking to a friend of mine, he used to subscribe 2 copies of Bhaskar, one at home and one in his office. Now he says my home copy is Bhaskar, but in office I see your app. So that 1 copy I lost because of the app. But I think that way, that reader is more bounded with me throughout the day with the morning newspaper and the app both.
Absolutely. Yes, sir. Thank you. These are my questions, sir. Thank you so much.
Thank you, sir.
Thank you. Our next question is from the line of Amit Khetan from Laburnum Capital. Please go ahead.
Yeah, hi. Just thank you for the follow-up. Just one question around, I see that on a quarter-on-quarter basis, your other OPEX has come down by almost 30 crores. Is this entirely the reduced digital marketing spend, and is this a sustainable number?
Yes, largely.
Okay, got it. Thank you.
Thank you. Our next question is from the line of Pawan Nahar, an individual investor. Please go ahead.
Yes, thank you, gentlemen.
Thank you, Mr. Nahar.
Yes, so my question is, I'm just trying to understand, last call we said we would look at a tax-effective way of distributing money, right? Now, our ownership is around 70, let's say 70.5%. So, wouldn't a proportionate buyback, wouldn't that have been a more tax effective? I'm trying to understand how does it, how do you rationalize paying so much tax unless the promoter entities, they are more tax efficient or they have other expenses, whatever. I mean, it's like that. It's a big tax outcome.
I appreciate your point of view, Mr. Nahar, and I will certainly put up this note up to my board so that...
You don't need to put it up. Your board is very wise and 2 of you are here. I mean, you are very wise. You run your business so efficiently. I'm sure there is a reason if you're doing it, you're doing it. That's your choice. But I was wondering, last time you all said that. Anyway, that was one point. The second point was, so the interim plus the previous year's final, so interim dividend of this fiscal comes first, and the final dividend of the previous fiscal will come later.
Yes, after the AGM.
Yeah, and the AGM is being held, I don't know when we regularly do it, but this time it seems to be quite late because most of the, I would say, efficient companies and investor-friendly companies tend to do it early, right? The way you are reporting your numbers early.
Our AGM is scheduled by mid of September, sir.
Yeah, that's late by your standards, I would imagine, but never mind. So I just have one request. One is if we could do something about being more tax efficient on the dividend, given that you have headroom in your ownership, right?
Sure.
And it won't change much. And second was, instead of this final dividend, it is better if we have to give 2 dividends, let's say this year. Do 2 interims and finish it off in the fiscal itself. Just a thought. I mean,
We will certainly consider your thoughts, sir.
Yeah. Thank you so much and all the best, and thank you again for the dividend.
Thank you, sir.
Thank you. Our next question is from the line of Harshit, of an individual investor. Please go ahead. Mr. Harshit, your line has been unmuted. Please proceed.
Yeah, am I clear?
Yes,
sir.
Yeah, my questions have been answered.
I'd
like to ask you one question. How are we, how will we compete ourselves with our competitors? I'd like to just know about that. Like, हम अपने आप को कहाँ पे रख रहे competitors के सामने? Like competition from companies like Jagran or any others? Because they are doing very, very well, I think, yeah.
Why don't we take this question offline with you, because the answer would entail almost an hour, and we'll be very...
Okay. Something in brief, if possible? Something in brief for a 30, 40, one minute?
See, I'm very proud to say from my team perspective that all 8,000-9,000 people, those who are directly working with Dainik Bhaskar, and thousands of them, those who are indirectly working with the Bhaskar Group, I think we all are very passionate about our work. And that's the reason why day in and day out we are able to produce newspaper which people really look forward to seeing it in the morning and read it and give that 30 minutes to us. And from every perspective, I think team is doing a fantastic job. That's the reason why even in the difficult times we were able to sail through comparatively better and smoothly in most of the markets, you know. And especially I would like to take this opportunity to talk about my editorial team. Because the kind of stories our teams are coming out with, they are investigating fearlessly. And mind you me that this fearless word is very easy and simple to say, but to live that word is really difficult. You know, like I must say that a couple of months back, my Bihar team did a story on sand mafia. Now, you know how things are and how the mafia would operate, but still they did a story. And we had gave option to the reporter that if he doesn't want his name to be published, we could drop his name. But he said, no, please go ahead and publish my name, because I'm willing to face any consequences if anybody wants to, you know. I think I must really put forward the kind of effort my editorial team and all of the team are making to make sure that our readers are engaged and feel knowledgeable and feel that, yes, we are working for them.
Okay, sir. Yeah, thank you.
Thank you, sir.
Thank you very much. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Thank you, everyone, for your participation and time on this earnings call today. I hope we were responded to your queries adequately today, and we'll always be happy to be of assistance to our Investor Relations Department, headed by Mr. Prasoon Kumar Pandey, for all your further inquiries. Take care, everyone, and stay safe. Thank you. Have a good evening ahead.
Thank you.
Thank you very much, Mr. Agarwal and members of the management team. Ladies and gentlemen, on behalf of DB Corp Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect.